Good morning. Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. We're coming to you live throughout the day from Crypto Evolved, hosted by Viable Markets, the industry's first ever conference focused on cryptocurrency market structure. Joining me is Dave Weisberger. He's the head of market structure research over at Viable Markets. It's great to see you on the road once again. So give us a brief overview of what Crypto Evolved is all about.
The idea is simple. There's a gap between maybe the West Coast, or however you want to look at it, of the crypto community and the Wall Street community, yet at its core, crypto assets are financial assets, and they're a method. I look at it as an incredible long-term way for compensating people who participate in what used to be open source, uncompensated activities. If you think about that, there's a huge productivity unlock that goes on. And we just heard from Michael Casey talking about the incredible value of decentralized blockchain as well in terms of record keeping, which is essentially changing something that's been in existence for 7,000 years. So our thought is, let's talk about what takes it from it's interesting to the mainstream and talk about what that needs to be. And so those are the issues that we're going to be focused on.
So you're moderating the Market Builders panel at Crypto Evolved. What's the overall theme and what topics do you expect to cover?
Our panel is a microcosm, kind of a deep dive into the sorts of issues that will impact how institutions want to adopt or not adopt, what scares them, what is important to resolve, what are the differences between decentralized and centralized exchanges, decentralized and centralized record keeping, understanding what are the different approaches that you're going to be taking. So we're going to be looking at.
And those are the priorities for institutional clients?
Sure, because if you're an institution, you kind of assume, well, you know, I have DTCC taking care of everything. I have the New York Stock Exchange or Nasdaq as these big organizations with incredibly sophisticated technology. You don't worry when you buy Microsoft on Nasdaq that your asset's going to get stolen from you. You don't worry that when you buy Microsoft on Nasdaq that you might be paying $1,000 too much for it compared to, you know, some other place. So these are basic issues that really do need to be resolved in the crypto market.
So Wall Street is slowly starting to incorporate digital assets as a strategy. Do you think this is a long-term strategy for anyone on Wall Street?
I think we are. I'm not even sure we've gotten into the pregame warm-ups in the game at this point. I mean, look, I was listening to Mike Novogratz at a conference earlier, and he made a really interesting point. He said, listen, Apple is a trillion, almost $1 trillion company. The crypto market is about a third of the market cap of Apple, and yet there are multiples of the number of engineers and brilliant talents focusing on new crypto assets and trying to innovate in that space. Now it takes time, and the market is a discounting mechanism, right? The market says, oh my God, this thing is going to be worth an amazing amount of money. And the answer is sure. If you ask me, will crypto assets be worth what? In 20 years, let's just pick it. In inflation-adjusted terms, it has to be worth trillions of dollars. Now, does that mean that any individual crypto asset will be worth more today than tomorrow, or which one will win? I don't know.
Well, it's like asking the question about equities.
Yeah, but like Bitcoin, I don't know if it ultimately is the winner for digital currency. It probably has the inside track. Well, if so, then you have to look at it as an option. I always have said this. I think I've said this to you before. In my mind, it's either worth the market cap of gold, which would make it 20 times, 50 times more than it is today, or zero as something else takes over. Well, how do you value that? It's going to trade very choppy for exactly that reason. So the entire market is going to move. There's too many reasons why crypto assets will become more valuable in the future.
All right, and what do you think the biggest challenges are right now?
The biggest challenge is crypto assets, and I think I said this to you once before, are polymorphic. The same asset can be a commodity inside a network. It could be a currency outside of its network, and could be an investment when people are buying or selling it on exchanges. I'll call it an investment as opposed to a security, but it could function like a security. People who are buying it to create wealth is very different than people who are buying it in order to use as a commodity or currency. And our regulatory regimes really only work on any one aspect at a time, and those regulations sort of like don't fit together. So right now we have this problem where in the US there's lots of fear and doubt about what the regulators are going to do, which is why a lot of intellectual horsepower is moving overseas. That's really my biggest concern, is that the US loses out in the early stages of this, despite having, quite frankly, the largest concentration of brain power working on it, but a lot of that brain power is kind of migrating away. So that's really the biggest issue.
All right, well, thank you very much for joining me at Crypto Evolved, and thank you for joining me throughout the day. I'm Jill Malandrino, global markets reporter at Nasdaq.